So morning again. I have a presentation of 20 minutes, sorry. Just kidding. So I'm Laurentiu from Colliers, Romania. I'm the managing partner. I'm within Colliers for the last 11 years. I started in valuation, then investment, and 16th of March, managing partner. So wish me luck. Colliers is quite present, as you saw also in the last slide. Robert presented. We have offices in all the countries in CEE. Our vision, let's say, is to be the most admired and loved real estate agency in Romania, and we have 4 pillars. So one, it's ethics. Second, it's knowledge. Third is teamwork. Fourth is having fun, because we have to have fun too. That's by myself. Thank
Excellent.
You.
Very good. Paul.
I'm Paul Hallam. I don't know so many of you in the room. I work with Manfred Wilcznig and Marco Kola in Vienna, and GalCap fulfills mandates at the moment, yielding commercial office space in Austria and Hungary. Why I'm here is that's not actually why we originally started the company. We started the company in 2015 for SEE and really far eastward CEE. And we did it exactly the week before the migration crisis. So what we deal with is the perception of the investors and how you can change their appetite for a particular region. We in fact, I was in Budapest looking at some buildings the weekend that it started. I arrived on a Friday, everything was normal. I came back on a Sunday, and there were thousands of people at Colletti, and I thought, wow, this is really strange, what's happening? And the very next week, we started discussions with people about shifting the focus then to the German-speaking region. That has now changed, and the perception has changed, and we're finding ourselves much more active in SEE and the march eastward of the money. So that's our story, and I'm happy to answer any questions later if anybody has any.
Great. Victor.
I'm Victor Constantinescu from Kinstellar, which is a regional law firm with offices throughout CEE and SEE, including very large real estate practices in Bucharest, Sofia and Belgrade, and welcome to my colleagues from both of those offices as well. I've been practicing full-time in Romania since 2004, so I think I've just seen just about everything here.
Great. Lila.
Good morning, everyone. I'm Lila Pateraki, Chief Investment Officer of Zeus Capital Management. We're investment manager specializing in real estate and lately in office acquisitions in Central and Southeast Europe. We've been in the region, especially Romania and Bulgaria, since 2007. And currently we are working in Warsaw, Prague, Budapest, Bucharest, and Sofia.
Great. Remon.
Thank you. Yeah, I'm with CTP, and we build industrial parks throughout the region. And we have a portfolio of around 5 million square meter, and we are trying to grow that to 10 million square meter.
Just?
Very good. And interestingly, when we've done a session with Lila before in London recently, when we asked where did she think the most opportunities would be, she actually said Bucharest. So we'll see whether that's still true today. Let's just pick up on a couple of the points just to start with. I mean, maybe with you, Paul, just in terms of, we can see GDP growth coming through everywhere aside from the UK, essentially, for reasons we won't go into. But you can see that happening, but particularly in CEE and SEE especially, where you've got huge growth here in Romania, for example. How do you see that influencing the real estate markets, that sort of macro picture?
So, as I said, with the perceptions from the investors, the numbers clearly support this eastward march of capital. It was a hard sell, for example, in Hungary. I'll just use Hungary as an example. It's not what we're talking about today, but it's a great example. Starting in winter 2016, the investors said, we changed our minds. We don't want to look at anything east of the Austrian border. And that created a huge problem for us. So temporarily, we switched our focus to the German-speaking region, but now that has changed. And there are pressures geopolitically in Hungary that now actually make Romania look very attractive. And so the conversations that we have are much easier. And as you said, the yields, I mean, if you just look at the yields, for example, it just supports this eastward expansion of investment.
Okay, good. And Remon, obviously you're focused a lot on the industrial area, and you've been active in these regions probably, more than any others in some ways in terms of that. How are you seeing the sort of economic factors fitting in? I mean, we saw from Robert there a little bit about wage inflation potentially. How's that impacting? Because if you've got growth rates of 7-9%, then wage inflation has to come in. How does that influence, I guess, the occupiers and that part of the business?
In our industry, you would, first of all, if we talk logistics, look at a city like Bucharest or Prague or Warsaw, and you could easily, like a few years ago, like 3 years ago, compare the number of people in such city, like 2 million people here in Bucharest or 2.3, compared to 1.1 in Prague, and then you could easily calculate the amount of square meter warehouse space. And then it was very simple. The conclusion was that there was an undersupply in Bucharest, obviously, and so that was when we started. So there was a lot of catching up to do, honestly. And then when we started, I think back in 2016, and then we acquired some properties here to get a certain volume and footprint. And then we saw the market recover, and that actually helped us to build more. As obviously, as you just said, GDP growth and all of that, consumer spending, that also means that you see more requirements for office space, but also in our business for warehouse and industrial immediately. And so I think the combination of, I think it's all about timing, really, if you're in business, but and you need a bit of luck now and then. So when we entered, we saw recovery. We actually bought at relatively low prices. And then we saw some yield compression, and the banks started to borrow money. All of that helped us to build the portfolio. Yes, hand in hand with GDP growth. But as I said before, there is also this catching up which we had to do. There was an undersupply, especially in terms of in our industry. And I think also for office and other developments in the city of Bucharest, there is still opportunities in certain areas of the city to develop. You could also maybe call that an undersupply. And if you now look at Belgrade, because as Robert also showed in his presentation, there may be also opportunities in Belgrade. I think politically it's very different, and also in terms of financing it's a bit different than what Romania is about. But you could also say that in Belgrade there are no really institutional or big international developers in our industry, at least. So you don't see the Prologis or Panattoni or P3 kind of people in Belgrade yet. So there is maybe another opportunity there. But,
okay, good. I'm going to come back to some of those other states shortly in terms of looking at the countries. Victor, I'm interested to get from you. Paul raised it there, which was that the perception, certainly when we've been doing events on CE, SEE in London, the perception has noticeably changed really over the last 12 months, but certainly over the last 6 months. Whereas before people would just say, well, there's no point me talking about opportunities in SEE because the capital simply won't go there. But that's definitely changed, which is interesting, whether that's to do with that there's generally more geopolitical risk in other countries, so it's a re-evaluation. But I'd be interested, Victor, just to get your sense from being based here. What's your sense of the perception of international investors now? Have you seen the same kind of change that Paul is seeing in his capital? And does that mean you're getting more interest from different types of investors?
Yeah, definitely. I mean, I echo what Paul mentioned, and I think what all of our countries here in SCC are suffering from is basically these sound bites, I can use the term that Robert mentioned earlier, that kind of unfairly characterize all of these countries in the region. I mean, I went on a roadshow last year to London with a bunch of my colleagues from other offices in Czech Republic and other places. And basically, all of our region were basically shut out of the conversation. When you mention Romania or Serbia or Bulgaria, they just say, well, we just can't go there. And you ask, well, why? And they can't give you an answer. They know nothing about our region for whatever reason. And I think it's basically an uphill battle for us as consultants, and a lot of consultants here in the room, lawyers and brokers and agents and whatnot, to basically push the case for all of our countries because, as you mentioned earlier, the economics make sense. And I think you're starting to see now more and more of these investors at least starting to ask questions, and that's the important thing, to change the narrative that we have right now about our countries, that these sound baits, Romania, oh, corrupt, Serbia, oh, I don't know what, Bulgaria, oh, too small, or this and that. I think that's something for us in the room here to basically push at these investors, and now we're starting to see an appetite with different players coming and at least asking the questions.
Okay, good. And Lila, have you seen that change as well in terms of the capital when you've been, talking to different sources of capital, that they're now more willing, that you're getting new investors who are potentially interested in looking at this region especially?
Well, as I've mentioned yesterday, US and UK has done an amazing job changing the risk tolerance levels around the world. So what was considered, a couple of years ago, urban was considered a huge problem, for example, since you mentioned Hungary. Now, it was the elections. They talked about it for what, a day, two, and then life goes on. So yes, because of that, as I said, risk to tolerance has increased a lot, and as such, the fact that there is the yield gap, the fact that financing is starting to come to this place, or interest in financing, let's say, is starting to come to this region, or is already there, means that more and more investors are looking or are interested in investing here and asking questions. I think Romania has done a good job, if we're talking about Romania over the last year, at promoting itself, and the people in the room has helped in promoting Romania as a good destination to be, as a high yielding, let's say, area versus the West Europe or the rest of the continental Europe.
And it's quite interesting just in terms of the relative change in risk and how it can change over a short period of time, which was when we were doing these sessions in London, in Paris and Frankfurt, which was before Christmas. You had a strange position, which was, for the first time ever, it looked as though France had the most stable political situation out of those three countries, which would never have been the case before. I just wanted to pick up with you, Laurentiu, if I can. Are you seeing, what types of capital are you seeing? Let's look at the capital flows a little bit. What kind of capital are you seeing? South African money, Israeli money, Asian money, US money? What sort of capital are you seeing coming into these markets?
So if I may say a bit of statistics, out of the 13 billion Robert was saying that it was invested here in the region, 27% came from West Europe. 18%, the second largest investor, was CE domestic. So the local investors invested in their own country. So Czech Republic invested in Czech Republic. Third is 14% is South Africa, and then it's US and Asia, about 10%, just to have some figures in our mind. What I can see here in Romania, yes, we have the market. It's different than it used to be 1 year ago. We are seeing visits. We had, even in this period of time, we had a visit from Middle East, which is totally new for the market, and it was an important one. We shall see if it's happening or not. We are seeing, yes, interest from South Africa, indeed, and from Western Europe. So if we are looking 6 or 12 months ago, it was a lack of product. we talked a lot with Lila about the lack of products, especially in office market. It is still a lack of products on industrial, Remon knows, and in retail, because it's dominant by several players. So in Romania, for example, it's still a lack of product in certain areas, but not on office. And we'll see transactions on office.
Okay, good. I've got a couple of questions coming in, and I'll pick up one of them now, so thank you for those, which is, in terms of the appetite for investors, looking at sort of secondary cities in this region, which for international capital would probably be too secondary at the moment, is there a way of increasing that appetite? Is there a sort of rationale for investment? What's your sense of that? And then I'll pick that up with Lila and Remon.
First of all, speaking about what Lila said, that we are trying to do to promote better, we changed the word from secondary to regional in Romania.
Okay, so Dan, it's now regional, not secondary. So that's
sounds better. Do you want to invest in a regional city or in a secondary city?
I've bought it.
So we do believe in regional cities in Romania. It was a study made last year by World Bank that in the next 5 years we'll see a migration of about 1.5, 1.7 million in Romania. People going towards the magnet cities. And 15%, about 15.5, doesn't matter after comma. So 15% is going to Cluj. It was a study we made statistically, yes. 15% in Bucharest, 12% in Timișoara and Brașov, and 4% in Iași. Iași is getting more, not from Romania, but from Republic of Moldavia. So the demand will come especially on retail, then industrial, residential, and yes, it's a, let's say, it's a fight for the new talents, speaking about IT industry and, let's say, then offices. So it is my humble belief that in the next 2 years, we'll see important transactions in regional cities too. We promote a lot the regional cities, especially for the ones which are early adopters of the idea. Then the market will come. But the early adopters, as Remon was in Romania, he benefit a lot from the mindset that Romania is the right place to invest.
And Remon, I guess for you, because of the logistics sector in general, you've got a different, plainly you need to be close to the large cities, but also you've got to have distribution hubs. So that makes it more practical, I guess, for you to look at regional cities and see those in a different way to investors in other sectors?
Yeah, absolutely. We love regional cities more than anything else, honestly. Also because we believe sometimes that in the capital things may be overpriced and all of that. And if you go to a regional city, you get a lot of value for money. And we have been promoting this for many years. When we started in the Czech Republic, we did a lot of stuff in a place called Brno, which is the second city. It's 500,000 people. But we used to call that, we still do, as a business smart location. And in addition to logistics industrial, which we did in Brno, we did do office developments as well. And in the meantime, we have built student accommodation stuff and so.
Even a small hotel, isn't it?
And there's a hotel build. It has been a huge success, and not just for us, but especially for our tenants, because they've been growing. And if I look at, because we talked about investor appetite and so on, would they not go to, as you said, they wouldn't want to go to Central Europe or anything east of Austria. I think it's also a little bit maybe about the regional cities, that they do not really know and understand the potential and all of the benefits, because because I do very much believe that these regional cities have a lot to offer. And if you talk Sibiu or Cluj or Brno, there is a technical university, and there is it has also the quality of life is sometimes is a bit, so you get a lot of value for money, which is typically something investors are interested in. So if I would borrow money for a project in Brno, I wouldn't pay a higher margin than if I would have a project in Prague. And honestly, I think I'm from Holland, so if I would buy an office building in Amsterdam or Rotterdam or even, I don't think that, honestly, that in that market that the Amsterdam building is more expensive than in Rotterdam or maybe The Hague or maybe even, there's a few other cities which are similar price. So I think it's also a matter of time for investors to understand the opportunities of regional cities. We love them, but also because of the like half of the portfolio we have built and we own is occupied by manufacturing companies, and they typically like to be outside of the capital because also labor availability, which is more and more an important thing for investors. And I mean, if you look at Czech Republic, for example, there's 2.4% unemployment rate, and this works against us because it's going to be very difficult to get. So what you see now in that perspective, maybe we talk about it later, is that production processes are being automized and so on and so on. That's of course the next step, which is also very good for the region again, because it will help us to be more competitive.
Good. And Richard, if I may add,
yes.
So if you are looking to the economies and we compare, for example, Romania, the GDP, the spread of GDP, it's in Bucharest, we are talking about close to 30% of our GDP is done in Bucharest. In Hungary, about 50% is done in Budapest. In Poland, it's about 20% done in Warsaw. Romania is going towards Polish path because we are seeing the regional cities developing extremely well on all the sectors, industry, commerce, and so on.
Okay, good. I wanted to pick up with you, Victor, just in terms of we mentioned there the amount of cross-border capital within the region. Is that something that's changed in terms of there being more available domestic capital who are active in real estate markets? Are you seeing more of that family office or more funds appearing that are domestic capital?
Yeah, definitely. I mean, if you look at some of these markets, definitely the local players are becoming more powerful, and you're seeing for a number of these new entrants in the market, the preferred vehicle for entry is a joint venture with many of these big players. This has happened in several examples here in Romania and Serbia in particular. And there are a few other transactions that I'm aware of where they're doing the same thing. So definitely the local players are becoming more active and also investing regionally as well.
And Lila, in terms of, I mean, obviously one of the issues that often comes up about what would be viewed if you're sitting in London or Paris or Munich or Frankfurt is that these are quite small regional cities, even the capital, in terms of being able to simply allocate a lot of money to it, because a lot of the funds want to get money into the market very quickly. But one of the things that people are often looking for is actually there being an exit, liquidity in the market, which if domestic capital is coming through, is that likely to make it more attractive in some ways for international capital because they feel that there is a potential exit for them?
Well, it's a double-edged sword. So on the one hand, depends on where the cycle you are. So if you're at the bottom of the cycle and you're getting into the market, then knowing that there is local capital that could acquire potentially the building when you want to sell is a good thing. On the other hand, having the local capital means that in a lot of cases the market overheats or goes faster up than it should because of international interest. Again, I refer to Hungary, which there is a local, and Czech Republic, where there is local capital. And in Hungary, for example, yields got down to 150 bips in a year and a half, if I'm not mistaken, and a lot of it was local capital acquisitions, which had no alternative, so they were buying a lot more aggressive. So yes, it's a good thing, but depends when it comes, because we've seen that we couldn't go into markets we were interested, Budapest, by an additional product, because we already have presence there, or Prague, because it became too expensive.
How do you see that influencing the markets, and do you think that's something that's going to influence them immediately over the next 12 months or over the next, 2 years, 5 years? What's your sense of that? Anybody pick it up from their perspective?
I was speaking like 2 months ago with a friend of mine from an audit company, and they are heavily working right now on automatizing all the invoices, let's say the input from the invoices in the data system. So they do really want to not to involve any person when you are, let's say, input the figures in a system, and they are heavily working on that. They have like 15% error right now, which is crazy. It's too high, so you cannot check. You have to check everything. But he told me that in 2 years they are pretty sure that they will have an error around 1 or 2%, which means a lot of bookkeepers will have to look for a job.
Okay, and in terms of the legal side of it, Victor, because there's potentially huge changes there in sort of AI being able to read contracts and do those kinds of things. What's the influence on your part?
I still use a BlackBerry, as you mentioned at the beginning, so maybe I'm not the right guy to ask for technology, but definitely, I mean, it's changing our industry as well. AI being able to do a lot of these due diligence efforts and things like this, standard template agreements, basically, for financing and things like this. We're definitely seeing a change, and we have to just keep up with it.
But at the same time, I mean, I'll mention US. Paul can comment on that. It takes 6 to 8 months here to close a deal, from first looking at the project, let's say, to signing, at least in office investment.
You are very positive. You are very positive.
Okay, fine. I'm trying to be nice. It's morning. But then it takes 6 to 8 weeks in the US to do the exact same deal, because we have operations in both countries. And it's hard for me to explain to our principals in the US, why do I need 8 months when they need 8 weeks? And a lot of it has to do with automation in contracts or in due diligence and how easy it is. But you still need the lawyers, and they are higher paying than here. So don't get ideas now. But so I think that we will have technology helping and maybe expediting things. But again, I'm a strong believer that the human brain will still have to be used.
And Remon, obviously in the logistics side, especially in industrial, you're beginning to see much more robotics with industrial units that don't need people necessarily and can work 24 hours a day. But you'll also be looking at things like electrification of vehicles, automatic driverless vans, lorries, those kinds of things. Is that going to have a big change on your business, just in terms of location, if you no longer have to, for example, worry about a driver's driving time, things like that, because it's then related to the battery, not the driver. How many of those things do you need to think about now, and how many of those are things that are sort of on the radar of where you're thinking about locating new logistics areas?
I'm from Holland. I came to the Czech Republic or Czechoslovakia those days when I was 22 to set up my own business. And initially, I wasn't involved in real estate. I ran a factory, a small production facility. So we would ship old machines which we had in Holland. We brought them to Czechoslovakia, and then we started to produce. And with the same equipment which we had in Holland, we produced more than we ever did, and the labor costs were very low. And that was initially what many other companies did. I had also bought some very expensive machines and welding machines, which I also installed in that old building which I rented. And I needed a lot of electricity, and I had in my rent contract also mentioned that there is so and so much electricity. Well, you can imagine when I plugged in the machine and when I switched on the welding machine, the whole village was dark, and there wasn't so. Anyway, that is also why I then thought, shit, I need another building, otherwise I'll not be able to produce, and that actually led me to start CTP with 2 other guys, because I had plans but no money, and the other guys had a little bit of money, and they believed me, and therefore they borrowed me something to set up CTP. But that was initially in 92, 93, why we actually came to Central Europe. And then when I got involved in real estate, built my own factory, and then thought, okay, the land was a bit larger than I needed for my building, so I started to build for others. And I sold my shares in the production company, which were worth almost nothing because we had this intercompany pricing clause, which I didn't know what that meant when I was 21, but I know now. So then we did this business park, and then we saw other companies bringing production activities from Germany and the UK, especially from Scotland, and a lot of American companies used to have their production facilities. And they brought these production facilities to Central Europe. And with the old machines, in some cases, they produced more than they ever did in the previous site. And they really thought, oh, there is a huge amount of opportunity here. And in the meantime, I think they have built, and we have helped them build the most modern facilities they have. So if I speak to companies like Honeywell and others, which are very active also in Romania, but they're also active throughout the region, including Czech Republic, they're very super happy about the operations they have in Central Europe. So it's state of the art, so it's better and more modern than the facilities they have in other parts of Europe. And this is very promising. And the same goes for infrastructure. I mean, I know here in Romania that there is some criticism, and people are skeptic about the speed of the Romanian government building infrastructure. But once the roads are done, it's going to be the latest, most modern, the best infrastructure in the region. And I think this will help to boost the economy more. And this is similar to buildings. So we are building the latest buildings, I mean, according to the latest standards. So the warehouses which CTP are building here but the same for office developers, it's better than office buildings which have been built 10 years ago, 5 years ago, 15 years ago. So it's all brand new. It's all super high tech, which is good, which helps us we will be ahead of many other countries in Europe. Compare Italy or France, you spoke about France, or Spain. So I think these are very good opportunities. So we get the latest layout, latest quality, latest standard, latest in terms of energy consumption, so we'll be ahead of others. And this will help the country like this to continue with growing. And that's what I think. So in my industry, we build good quality property. We are long-term investors and owners and all of that. But with our clients, we work closely on also to optimize production processes, or in e-commerce business, which is one of the main drivers, to make sure that the latest technology is installed, and that also goes hand in hand, honestly, with less people involved in the processes. In Romania, that's still okay because there is still unemployment here, but in Czech, as I spoke, 2.4%. That means you need to optimize your production processes because you will not be able to find people. It's just not available. And then also you can do stuff on efficiency and productivity will go up and will improve, and that is also a change of culture and mindset. Because that people will realize that labor is expensive and scarce, so you need to find different ways how to do that. Which is not bad. It's very good. It's part of how it's another step of how the country and the region will develop, which is very good, I think.
Okay, good. I've got a quick question come in here as well. Thank you for these. They're coming in, and I'll deal with them as I can during the discussion. Which is for really for Paul and Lila in a way. Which is in terms of what's to compensate you for investing in, let's say, Romania. What do you need versus investing somewhere else? So do you think the yields match with your expectation? I guess is the yield difference between here and maybe other competing regions. Do you think the yield is about right, or how do you see that?
I think it's very positive. I think it's an easy sell, to be honest with you. I mean, in the conversation. I want to, later, maybe we can go back to something Lila said about the 6-week, 6-month issue, because it really relates to...
Let's deal with it now, Paul.
Okay,
let's deal with it now. You've raised it, let's deal with it.
I think it's really important to note that, the United States is what do they call us? A diverse people united by a common language. So if you want to, if like Craig is in Los Angeles and he wants to close on a house in 10 days, 3,800 miles away in DC, he can do it in 10 days or 2 weeks. It's not a problem. Everything's highly automated. That being said, Europe has the language differences between the countries are very interesting. There's a big similarity between the Austrian education system and the Romanian education system. The grasp of English here is wonderful. Even when I was in the cabs yesterday, which I don't get in Vienna. You know, I get in a cab in Vienna, sprechen Sie ein bisschen? Nein, ich spreche nur Deutsch. Okay, sorry. And since I'm using English in the office all day long in speaking to our colleagues in Poland and the Czech Republic and Hungary, generally in an English language mindset. But that's not going to ever change the fact that you have to have the investment dollars now might have an SPV in Luxembourg that is a German pension money where you are buying assets in Romania and Hungary. So we have to have our contracts in German. We have to have a courtesy contract in English. We have to have them in Hungarian. And this is never going to change, and that's a good thing. Each country should embrace its own language. So the key for me is to have a really talented transaction team, and I think that's going to never change. I don't think you'll ever be able to really automate that. And thinking about the talent behind how quickly and how transparently and how organized someone is behind the transaction, I don't think that's going to change. And I also don't think that the length of closing on a deal is necessarily a bad detractor from a deal. I think somebody coming into this region is going to have the patience and say, okay, no, this is the asset we want, and we're willing to, ride this horse to the finish line.
But I always thought that you need the 8 months period for the yield to come down.
I want to pick up a couple of things that have just come in as well, which is some of it is, again, things that are appearing alternative. The alternative investment sector is something that we've been talking about a great deal in the sessions that we've been doing over the past kind of 12 months. Also sustainability, both green issues and the sustainability of the investment. How important are those things in terms of development here? Because there's a lot of development, redevelopment opportunities. How important are things like sustainability, and are investors looking more at the sustainability in general of that investment as well as the green part of it? How important is that here, Laurentiu, in terms of the investors and developers?
First of all, they start with the sustainability of the rent. Then we speak about others. So, yes, we have quite a large let's say, number of mandates on the green certification. So everything which is built in Bucharest or even in Romania, it will respect certain standards. A new standard which is on the market right now, but there are just 3 guys who can provide that. It's the well building. So everybody does green, like LEED or BREEAM. But well building will come with a lot of things for the employee. It's totally different mindset, and that will really have an impact on the employee quality of life. So I do think that our products are sustainable and comparable, as Remon was saying, with the ones from Western Europe. So I'm speaking now, if you are going to Warsaw, it's equal. You do not see a difference. But even in Bucharest, everything was built in the last, I may say, 6 or 7 years. It's very well done. And we'll see jumps, as Remon was saying, because the speed of internet in Bucharest, in Romania, it's the highest in Europe, second in the world, or something. And that's it has an impact in everything, in online sales, in that's it.
Okay, good.
In terms of green buildings, I would say that it's, at least in the offices, it's not a trend because that's the wrong word, but it's a requirement that it's mostly dictated by the tenants, which then is followed by the developers, and that's a good thing. So what we see, at least in our cases, is because majority of our tenants are international, and there is this green awareness and this sustainability awareness in the US tenants or West Europe tenants, then they won't go into a building that is not certified, energy efficiently certified. So it sort of drives how the market has evolved, which, as I said, is a positive thing, and I think it's a good thing for the planet. But I think that's what is driving this whole discussion.
Okay, good.
Can I just add one more thing? Because we spoke about green buildings, but I think it's also important to make sure that people really like to work in these buildings, right? So you have all kind of other like things which make it an attractive workplace, especially with such a low unemployment rate. And that has been always important for office developers for sure, but also for us as industrial, that we make sure that people actually are happy to work at that specific place. So small things like shuttle buses, but also on-site accommodation, restaurant, medical care, all the little things which makes it more comfortable. And we do a little bit of office space as well, and I involve my 20-year-old daughter, she lives in New York, to also for her, I want some feedback from her, where would you want to work, right? Because these kids, they like home office and they like all kind of things, but they don't want to sit in a very traditional office block building, I think. So that is even, I think, beyond the green stuff, there is more for us to add in order to create these places where they are happy and well, do a little bit of work, but also be nice and and get some inspiration and all of that. So there's beyond.
Let's have a look at some of the sectors. Remon, just give us a brief overview of how you see the logistics sector, particularly in this region. How do you see that developing? Where are the opportunities?
Okay, logistics in Bucharest, start with Bucharest. We did some catching up over the past few years. There is a lot of supply coming to the market. I think we will see an oversupply next year. As I said, there was some catching up. A lot of people put property to the market. Now we need to be a bit careful not putting too much property to the market here in Bucharest, short term. The other parts of Romania, there are lots of opportunities for not necessarily regional DC distribution centers for the bigger region, but for sure for the whole of Romania, and maybe even Romania plus part of Bulgaria and so on. So I think there's good opportunities in terms of logistics for e-commerce, manufacturing, regional cities. I think so. There's a lot of automotive industry. We could build stuff for suppliers. There's well-educated workforce. So that's what I see in terms of Romania. Serbia, Belgrade. We just bought land, a small site, but we think of starting, well, we're not thinking, we will build something to test the market. I think there are opportunities as well in Serbia and Belgrade for sure. So yes, there are definitely opportunities in terms of supply. We have picked land sites, we bought land in order for us to grow from 5 million to 8 million square meter, and most of the growth is in this region, not so much in the Czech Republic, honestly. Also because there is lots of issues with respect to zoning and permitting, and the market is more developed than it is here.
Okay, good.
So I'm positive.
Good, thank you. Victor, in terms of the clients that you're seeing coming through, are you seeing particular trends across the region or here where they're looking more at, for example, are people beginning to look more at student housing, or are they looking at hotels, or what are you seeing from the client side?
From the client side, I can't say that, from the alternative investment side, I don't see that product being sufficiently developed yet to offer something to institutional investors, whether it be student housing or be nursing homes or things like that. We are seeing a considerable uptick in the hospitality sector. There's a lot of transaction activity on the hotel side. Retail, but otherwise it's the core. I think I'll let my colleagues from Belgrade and Sofia talk, but definitely on the logistics and the hotel side, that's where we're seeing the most activity.
Okay, good. Maybe let's just pick up with you just because you're here. It would be good. Can I borrow that? Thank you, Lila. Just give us a quick overview, if you would. Just in terms of what you're seeing in your market, are there particular new investors coming in? Are there particular sectors that are growth sectors? What's your sense of that?
Sure. Okay, in Serbia, going back to what Mr. Laurentiu said, we have an influx of investment from the UAE, and they have recently invested in energy, in agriculture, and there is a huge development called Belgrade Waterfront. It's the Eagle Hills from the EEAU, and they have everything there. They have housing, they have office, and they have hospitality and hotels. That's where the St. Regis branded residences will be. Also, there seems to be a small saturation with retail in Belgrade, but not in the regional cities, where we are seeing some sales being made from local investors to South African funds. And then housing, a trend in housing is quite good in Serbia. And of course, hotels and tourism is picking up immensely in Serbia.
Okay, good. And what about Bulgaria, Sofia? What are we seeing there?
For 2017, actually in Bulgaria, there is a considerable pickup in terms of real estate transaction. We mainly see transaction in the retail sector. Let's say around 70% of the retail owner change hands now. The second wave, at least from my perspective, is the office building, because currently in 2018 we start with a lot of office transaction. The question will come up again about the product. Do we have enough office developments in order to give to the market? And there is undersupply under the residential sector, so this is from our perspective something which is coming up. Again, hotel leisure, we see a very interesting entry of big hotel retail chain under the Bulgarian market, and they're considering not only Sofia but also the seaside and the mountain resort. So these are, I think, the sectors which I see a potential and growth. And as Remon said, again, this is logistic. This is something underdeveloped in Bulgaria. We are very happy to see investors like CTP coming up, because considering Bulgaria together with Romania, this will give very good prospects.
Okay, good, thank you. Interesting that you both picked up there a little on hotels and leisure. And Laurentiu, I mean, the hotel we're in today sold last year as quite a big deal. Do you think that's an indication of kind of more investor appetite for hotels, and particularly for this region?
We saw in our, let's say, statistics that the hotels increased in the last 1 year and a half. So I guess the trend will continue, especially that in the whole region the accommodation is increasing, mainly, let's say, in Serbia, in Croatia, in Montenegro. It is due, if I may say, to the crisis from this point of view in Turkey, but it's very good. Also Bulgaria. This hotel, yes, is the icon, if I may say, in Bucharest. It's a lack of product in Bucharest on hotels, so not many for sale. But as far as I know, we will have new products on the market built, so there are plans for new hotels.
Okay, good. And we have a chain from Germany looking to expand. What's happening in the retail sector? And anybody can also pick these up. In terms of retail, what are you seeing? We've had a lot of discussions recently in the retail markets where bad news coming from the US seems to be changing perception here, not necessarily in this region, but looking across Europe. What's your sense of the retail markets here at the moment? You've got GDP growth. That should suggest more money in people's pockets, and retail should be booming.
We've made an analysis on with respect to the wages, and compared with 2007, so we took inflation out and so on, and with the salary now, you can buy more than 70% more services and goods than you were able to buy in 2007. So the power of the salary you have right now, it's with 70% more, bigger, let's say. Also, we have seen that in the past, so in 2007, 50% on what was bought on credit. Now it's not the case; it's lower. So that means that people will start to spend to have more and more money to spend. We saw that in transactions. So in the last 2 years, in transaction, I mean in the sales. In the last 2 years, the sales of the retailers increased with 2 figures, sometimes more than 20% yearly base. So it is a lot of demand that's very helpful also for Remon, let's say, on logistics. And in Romania also we addressed how online will affect retail. And we do believe that at least on the medium term, the shopping centers, the good schemes will not be affected. Why? We do not have high street, for example, in Romania. So that element, so everybody goes to shop to a mall. And it's a lot of room, yes, for increasing the online, but we do not have high street. So I do believe that the good shopping center will stay for a long run. We do not have products available on the market, unfortunately, for the new investors.
Okay, so lack of product may be an issue across a number of these sectors,
yeah.
actually.
Yeah.
And Paul, in terms of the sectors that you're looking at, how do you see the outlook for those?
At the moment, we have, let's call it conservative pots of money. So much of it's coming from pension and insurance funds. And they tend to not be too adventuresome. What was the slide? Adventuresome and happy or something?
It was...
amazement. Yeah, amazement. Amazement doesn't do it for pension funds. They tend to be extremely conservative, so of course right now we are just presenting yielding commercial office space, which, as has been mentioned many times, is an inventory issue. Getting back to one thing with retail, though, and everybody in the room already knows this. If you follow the trend of shopping centers from America, and I think you should, because we do everything quickly and big, and then we make huge mistakes, and it ends up being a disaster, and then we move on to the next thing. Like we're so fascinated with authoritarian dictators that we have one of our own now. And so, but as far as shopping goes, in the 80s and 90s, there was a huge shopping boom for shopping centers right before the internet exploded. And you can now go on, actually, I think there's a website called deadmalls.com, and you can see urban explorers go in and they photograph these things. And it's not that there's 1 or 2 or 12 or 20, there's hundreds just closing, because Amazon has changed the whole nature of shopping. And I don't know where I read the statistic about Romanians. It was either in the Colliers report or a JLL report, that in the EU...
Almost certainly a Colliers one, I would think, Laurentiu, wouldn't you? I mean,
we are happy with competition. Good statistics are good for everyone.
So the statistic that I read, and correct me if I'm wrong, is that Romanians in the EU are the highest percentage of people who will examine a product over and over and over and then buy it online. And they really look at it. I mean, they go to the stores and they want to see it and they want to say, okay, I want to compare this to this. But in the end, they're as you said, with the highest internet competency here and the best system, everybody's shifting to online.
But still here, the penetration of online sales is very low. It's growing heavily because we are coming from very, very, very low figures.
Okay.
But still, the main, it's okay, done not online.
Okay, because the trend in Austria is shocking. I mean, it's shocking the number of packages that come to our office every day from Amazon for the secretary. And I said to her one day, do you go to a store? And she said, no, I haven't really been in a store for a long time. And she's Ukrainian. So, yeah, Amazon and I guess Alibaba, or whatever the Chinese equivalent is, it's going to change consumer habits forever. The malls that will survive will be the ones that are almost give a kind of a high street experience. They have diverse attractions.
Yeah,
and
it's entertainment a lot there.
Yeah,
and
absolutely.
Yeah.
Yeah, and you've definitely got a... Oh, sorry.
This is sort of a... Sorry, maybe I'm straying a little bit from the point, but and I know that we're pressed for time, but just to sort of come back to that issue of the 6 to 8 weeks to 6 to 8 months and things like this, I mean, just to come back, I think what we're hearing here from the colleagues here on the panel, that there's a lot of positives coming out of this, out of our markets. You know, Remon mentioned, you know, the human capital. We're talking here about the retail sector, very sophisticated client base, people, you know, internet penetration, whatever you want to call it. And, you know, unfortunately our region, you know, 6 to 8 months, why does it take that long and things like that, you know. It's not a legal risk in our markets. If anyone is going to tell you that, you know, there are legal risks connected to it, I say it's BS. You know, that means that don't have competent advisors or whatever it is. All the legal risks can be managed here in this market. There's title insurance. We use institutional documents from the West, the 50-page documents. Maybe that's why it takes 6 to 8 months. I don't know. In New York, it would be a 2-page document. I don't know. You know, political risk. You know, is there a political risk here? I don't particularly see it. Okay, we talk about authoritarian dictators. We don't have that here. Romania, okay, a little bit arguable, but you know, incredible political stability in Serbia, in Bulgaria, in Romania. We have, you know, because of the strong U.S. military presence here, we have a lot of monkey business with our government, but there's only so much room for them for margin for them to do this kind of stuff before they get beat down again and being told to behave again. So I think we just, as us and everyone here in the audience, we need to keep repeating this message to everyone that we speak to, that I think the positives far outweigh all the negatives that we hear.
Okay, good. Just one quick thing, because it would be rude not to ask this question, which is, are there any particular regulatory, legal, tax things that international investors who may be watching this in Shanghai or New York should think about, if there's anything new or changing that they should think about when looking at these markets?
Look, I don't think there's anything completely out of the ordinary in any of these markets that are not manageable. I mean, like I said, if someone is going to tell you there's a big legal risks or something like that, give me a break. It's not. These things, risks can be managed through your lawyers, through title insurance, through whatnot that can be done. In Romania, sure, we have a problem with legislative instability, what I call these tax grabs or cash grabs. Romanian government will change the law and then all of a sudden increase the tax. We had it a couple years ago at the pillar tax, now a new tax, and this and that. And then they back down after 6 months or a year after they take the cash already. That we do have. It's just short-term thinking and just to try to cover the budget holes. But otherwise, the answer is no.
Okay, and a quick one just for you, Lila. In terms of financing, availability, price here for the region, do you get what you want from, in terms of financing? Can everything be financed, or are you having to finance a lot with equity? What's the position?
Depends on the product. So, and again, it depends on the country. So yes, there is financing. I'm not sure, at least in office acquisitions, and I'm talking income-producing properties, there is product that is not bankable, like product that has small remaining lease duration. Banks don't like that. Product that has vacancy. Banks don't like that. And then there is this different profile between the various countries. So one of the things that I think has kept Romania back, and I'm glad to hear recently we had discussion with a couple of banks, and it seems to be changing the mindset, but was that you could find attractive margins, because everybody talks about the margins here. You could find attractive LTV ratios, but then amortization was very high. The amount of years for repaying the loan. So in Warsaw, because we're doing a transaction there, you could find, you know, zero amortization on 50% LTV. You could find 2% on 60% LTV, something that was unthinkable in Romania. In Romania, you were talking about 4%, going up.
5%.
Yeah. Okay, I was again polite, but now I've heard recently, and that's a discussion from a week ago. We haven't tested it, so.
Laurentiu's taking notes here. Be careful. I don't know what.
So that this is slightly changing, and that banks have more appetite to go for good quality product into providing more aggressive financing, not necessarily in terms of LTV, but in terms of margin amortization. Remains to be seen, but again, comparing countries, if you're buying a product with a 7% yield, in Poland, and you have financing which is below 2, an ammo of 2% is totally different from buying a product at 7% yield in Bucharest with margin of 3% or 2.5% amortization of 4. It doesn't leave money on the table for the investor. So I think that is, and Bulgaria is a little bit worse than that. So I think that is also one of the reasons that Romania has stayed a little bit behind from some of the investors that are looking more on the core plus, let's say, side of products.
Okay, good. And I want to make sure that you all have plenty of time for the networking break, but I've got one very quick fire question, which is, so, invest. Where should we invest? Let's start with you. Let's start with you, Laurentiu. So, where would you encourage people to invest? Let's look at this region. So, where should people invest? You can either choose a city or a sector, or how do you think people should invest their money here?
Of course, I'm speaking about Romania, so I'll vote for Romania. And the reason Lila said already, so there are quite a few reasons you should place the money here. I will go for regional cities, office, if I will like to play Remon's game, let's say, how he thought forward. So that's an opportunity in my opinion, and it started to be seen by the local players, so local domestic players. Even if they are not Romanian. And yes, I will go for office generally in Bucharest, and it is a real reason. There are no products available on the other markets, unfortunately.
Okay, good. Paul, and there was also a question came in as well, which was about longer term horizons, and you've got patient capital, so we'll count your money as being long-term money in terms of investment.
Yeah, in the immediate term, I would be yielding commercial office space, and then my preference would be logistics. Speaking specifically about Romania, and that would be sort of our immediate term plan.
Okay, good, Victor. And I know you're going to tell me that you're an advisor and you possibly can't, but we're going to pretend that didn't happen.
No. But I'm going to take a little bit of both of the previous year. Regional cities for Romania and definitely logistics for Bulgaria and Serbia.
Okay, good. Lila?
Well, we don't believe that much in regional cities. Sorry. So I would
you know when you'll buy it will be more expensive, so no worries.
Or
write it down in your
depends when it's going to be. But anyway, so I repeat what I had said in the past. We do believe, and I'm talking about the region. We do. First of all, we invest in offices, so I'll stick with that product. And then I do believe that the majority of opportunities right now is for Warsaw and Bucharest. Concern in Bucharest is the availability of stock. Laurentiu just tried to say that there is a lot more coming, so that would be good to see.
Okay, good. Remon, last.
Yeah, I think if you want to invest in something, then you want to know that it has a certain value, and it may has a higher value later on. So and at the same time, it will create a certain income over a certain period of time. So I agree with industrial and logistics. Why? Because you get long-term hold, and these properties, they are an important part of creating value. So if I sit in an office and I need to do some emails, and so I can also do that out of a hotel. If I have a state-of-the-art distribution center, which I need to run my e-commerce business, then that building is very key and strategic for me making money. And that is why industrial property and logistics property is so different from office or retail, because it is such a key part of the company's success. And this is also why our tenants, or logistics industrial tenants, are happy to commit for so long. And this is again also why we should look at in regional cities.
Great. And so we have a 30-minute break, and we'll start.